Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again on the euro currency. So today's we prepared, I suppose, interesting weekly report because there are some important issues on the fundamental background. We talk about possible changes in the Fed policy. Also, guys, currently I'm closely watching the St. Petersburg Economy Forum, and it's really becoming the big forum, and currently it's the size of this forum even greater than the forum in the Davos. So, and sometimes you could hear from the speeches of the politicians very important information in relation to the currencies and in general overall political and economical background. And yes, it was a really important speech, as I suppose, of the Putin and Mr. Xi Jinping. And that really could make an impact on the long-term situation in the United States dollar. So I put my ideas in the forum, so you could read it. You could be skeptical to this moment, but I suppose that this is not just some empty statement. So I think that they definitely should get some continuation. Speaking on the short-term situation, well, market currently stands in a good upside pace, and if you remember, last week we actually discussed the possible drop of the United States dollar. We said, well, currently it seems that the background for this starts to form, but it is unclear what particular driving factors will be for that drop. And last week we actually got these short-term driving factors. They are mostly based on the two moments. First of all, the same tariffs wars, and the second, the possible adjustment of the Fed policy. So currently, the expectation of the investors has changed drastically, and they expect even possible rate drop on the July meeting or in September. It's a very high probability that this will happen. So my personal view is that actually, guys, speaking on non-farm payrolls release, I do not see a really big negative moment in the data, because month by month, all investors wait for the 3.2 inflation. So I'm not even speaking on the numbers of the payroll numbers, because economy is highly saturated. The employment market is highly saturated. The unemployment stands at very low level, and to expect the same pace of the employment growth is not quite logical. So that is normal process when it should show the slowdown. But I'm speaking on the wage inflation, and month by month, investors are waiting 3.2, 3.3 inflation, but every month it shows 1 decimal lower, so 3.1, 3.2. And every month we heard that inflation is below expectation, inflation is below expectation. So investors actually react on the same mismatch on the expectation and on the real statistics. And it repeats month by month. I think that it's a bit, artificial reaction, and this is the first moment. The second moment, when the investors day by day see the real situation in the mass media, speaking on the tariffs, on the losing pace of the United States economy and so on, why they expect the same numbers. In the current situation, the 3.1 inflation that the United States economy shows, it possibly should be treated as a positive sign rather than the negative. So, and I think that the divergence is growing between the real statistics and market expectations. And it means that somewhere the adjustment has to come. Either investors will be wrong, and that should lead to some big drop on the euro, on the chart, or statistics should start to confirm the investors' expectation. So what I would like to say is that the expectations that investors right now keep on market was not tested yet by the real statistics. There are two events that probably will lead to this testing. This will show this test. Is the July meeting of the Fed, where they should share with the view on the economy, and second quarter gross domestic product in the United States, because the first quarter GDP was about the 3%, so it's really very good numbers. So currently, I think that investors blacken the situation a bit, and I'm not sure that the medium-term perspective will be so negative as it stands right now. So reaction, maybe it's a bit emotional. So it means that in the shorter-term perspective, within the few weeks probably, we could follow this momentum, we could follow this enthusiasm of the investors on the market right now and trying to trade it long. But in the perspective of the few months, well, situation could become more balanced, and these victory relations probably could chill out a bit. So we will see. All the stuff we discussed in the weekly report as well. So now on the technical situation on the market that we have. On the Friday, market has shown really good action, because on this upward action, market already was standing in the overbought condition, has broken through the confidence resistance that's standing right here. So I do not have it in the chart, but you probably remember our charts of last week, and that was the confidence. The market has broken through it. Now market again stands at the overbought. And for the beginning of the week, we have just one question: whether the market will proceed directly to this resistance around 1377, 1392, this confidence daily resistance, or it will show first the pullback and then reach this resistance area. We even do not consider the fact that market could break it right now, because market stands at the overbought. This is daily, weekly resistance area, and definitely market will stack here for some time and should show some pullback. For the first scenario, if market will show a retracement right here, we could consider it's possible some kind of also hand shoulders or something of that sort. So here should be formed some pullback here. So maybe it will be the same depth as this one. Could become left shoulder, head, maybe market will form another shoulder here. And then in a way of kind of the A, B, C bottom, deep edge, and market could reach this confidence resistance. That's overall view. If market will hit this level first and then show drop, well, in this case, we just will consider the same upward action, but in a bit different circumstances. In fact, since we do not plan to trade EUR on the short side right now, we do not care much how this particular will happen. What we're really interested in is that with a good level for taking the long position. So we need to get the kind of the pullback to some support. It would be better if we will get the kind of the cards cheaper to buy or something of that sort as usual. And we will try to use this construction in the way of the reverse hand shoulders or something of that kind with the planning of the trade to the upside, some ABC pattern, something of that sort. So that's the, in general, what trading plan we have for the beginning of the next week. On the 4-hour time frame chart, we could consider some extensions. So actually, our upside targets here of this swing already has been hit, and we need to take a look at some larger scale patterns. First of all, we have this A, B, C bottom extension. I not consider it as a target because the actual C point here stands slightly below an A, but this extension could provide a resistance. And it stands at 1359, it's XOP extension. Second extension is 1618 of this XC swing. So you could treat it as the butterfly or something of that sort. Anyway, that also provides some resistance. It stands at 1359. So it means that 1355, 1360 is an area where retracement should start. If market will break it up, it means that market goes directly to this resistance. On the hourly chart, we could consider the same pattern as on Friday because its target has not been hit yet. So that's our so-called reverse hand shoulders that we talked about it. We have the A, B, C bottom, and OP target also has not been hit. It stands approximately 1352. So it means that market could open slightly high, hits this target, 55, 60 approximately, and then you need to keep an eye on what will happen. If market starts dropping lower, showing deep retracement, it means that we're coming to the first scenario with probable moderate retracement here, and that we will watch for some fib supports where we could take the long position. If nothing will happen, the market just will pass through it. Be prepared to reaching this resistance first and starting of the retracement second. So we will, as usual, keep an eye on the situation now in regular daily videos on the forum. So that's our view on euro currency situation, on the euro and around the United States dollar. Currently extremely interesting and thrilling, and it's really I suppose that's really big event stands ahead.